Hey everybody, it's Gary Peavy here at the Wealth Design Group, and I got my cool hat on today. Either being cool or being sort of grandpa-y, because what I want to talk to you today about is using family legacy to create wealth for the next generation. Now, I want you to think about this. Now, if you are a parent or grandparent, would you be interested in doing something for your kids or grandkids that would enable them to have certainty about what their financial future would look like whenever they get to be your age? Also, if you are in your 20s or 30s or 40s, let's say, maybe even 50s, are you interested in knowing how you could be empowered by your parents or grandparents to actually create wealth for you when you are no longer going to work, when retirement comes along? Okay. There's a fabulous strategy that I want to share with you today. So let's say that you're working. I mean, if you're 20 in your 20s and you go to work someplace and somebody says, put money into a 401k, what's happening is you are putting it in pre tax. You are postponing the tax for the next 40 years until you get to retirement. And right now, I'll bet your tax bracket is really low because you're not making as much money. When you get older and you get closer to retirement, your earning potential will be much greater and you will be in a higher bracket. But somebody's telling you to defer it now and just postpone it to the future. And your 401k is subject to market risks, to ups and downs. You really don't have any liquidity to be able to go get the money and use it for something. Because let's think about what you need money for if you're 20s, 30s, 40s, 50s. You've got, you're starting a career, you're in the middle of a career, so you need money ultimately not for your current lifestyle, but for your future lifestyle. That's when you're no longer working. You need, you're buying cars, you're buying houses, you got kids, and you're trying to figure out how am I going to pay for college for them. There's a huge need to have access to capital. But unfortunately, traditional retirement plans don't give you any access to capital like that. Okay. So, what if you could have access to money you're saving so that you could take advantage of opportunities or maybe handle emergencies or just maybe increase your current lifestyle a little bit for something special for you and the family? So, what if you could do that with savings? Okay. Now, what if when you got to retirement, your money you were going to use to live on for your your future lifestyle, your retirement income, what if all that money was tax free to you? Not taxable. A lot of people don't understand when they put all that money in their 401k, it's all taxable to them when they get to retirement and start taking money out. Okay. What if it could be tax free? I'd like to talk to all of you about probably one of the most valuable assets that you have, and that is your insurability. People don't think about that, but being insurable is fabulous. If you are uninsurable, you know how that feels. But being insurable, where you could go to a life insurance company and say, "Look, would you insure me for $1 million or $2 million that in the event, when I die, it'll be paid out?" Okay. Insurability is fabulous because it has to do with actuarial science. Actuarial science says you take 1 million people and they all put in a little bit of premium to have millions of dollars of death benefit. You can't self insure and get the same leverage. So here is this fabulous idea. What about creating family wealth? How do rich families, how do wealthy families continue to have wealth passed from one generation to the other and have it tax free? What they do is they insure the older people in their family. So if you are the parent or the grandparent, how about having your kid buy life insurance on you? They're going to insure your life if you're insurable. Now let's think about what happens. They're going to pay the premium. Okay, so your kid's going to pay the premium. So instead of putting money into the 401k, they're buying the life insurance on you, and their retirement contribution is paying the premium. So let's say your kid is 40 and you are 65. Okay, so your kid's going to retire in 25 years at age 65, and you are going to be 85 or whatever, and you're going to be at your life expectancy or beyond, and you pass away. And your kid, rather than having a 401k account that's subject to the market and subject to um, uh, income taxes and all of that, they're going to get a tax-free life insurance benefit that's going to come in. And that would fund their retirement using the same amount of money. But in the meantime, having this cash value permanent life insurance that they own on you, they've got access to the cash value. It can turn out to be their own source of funding, banking, if they need to buy a car or have opportunities or emergencies. All of those things they could have that they wouldn't have if they're putting it in their retirement account. Creating family legacy is so valuable to everybody in the family. So there's an idea. If this has any attraction for you, if anything about it went, man, I should talk about that, give us a call. All right. Or send us an email here. Send it to Gary at wealthdesigngroup.com, and let's have a chat and let's see if there's something that we could work out for you. Thank you very much for listening. I hope this was something that gave you an aha moment. You take care.